3-1 work together. What we are doing is dealing with transactions that are in a journal, and you can see the journal here at the top that I have highlighted. We have what is called a 5-column journal: general debit, general credit, sales credit, cash debit, and cash credit. That is our journal. Now, how this will work, I'll explain in a minute, and as you can see, I have the work togethers done here on the page. But what is going to happen is, if we have something that is impacted by cash, we will put it in the cash column, and then the other account generally is what will go in the account title, and it will be either general debit or credit. And I'll kind of go through this and explain exactly what I mean by that. The first transaction on page 62 in the green box is April 1st, received cash from owner as an investment, $1,500 R1. The first thing we do is put the date in, and then we have to break down the transaction. Well, we've got cash, so we know our cash is going to go up and it's going to be debited $1,500. And we also know that our owner's equity, which is Norm Derner Capital, was also impacted and went up $1,500, and that's why the general was credited. Transaction 2 was April 2nd, paid cash for supplies, $375. Again, cash was impacted. Supplies is the new account that was impacted. Supplies was actually debited, so we do that in the general because we don't have a supplies account at the top, and our cash is credited, $375. This column here with the document number, that is at the end of every transaction. R stands for receipt, C stands for check, M stands for memorandum. So just make sure you note those, but you will always put those in. It's right at the very end of the transaction. On page 66, we go into 3-2. First transaction is bought supplies on account from Palm Supply, $500, M1. This is a little bit different because we don't have cash and we don't have sales that are impacted. So now we're going to actually be on two different lines, which you can see here, both on April 5th. We always put the debit on top, which is supplies, because we gained supplies, but we didn't pay for them yet. So that's on accounts payable, Palm Supply, and that's why we credited general as well. You'll notice I didn't put the date in there. You don't have to. Same with document number. If you do, it's not wrong. You just don't have to do it. April 7th, paid cash for insurance, $300. Okay, we gained insurance, which is an asset. Prepaid insurance is an asset, so we are going to debit general, $300, credit cash, $300. And the last transaction in 3-1 and 2 is paying cash on account to Palm Supply, $250, C3. Accounts payable, Palm Supply. We are now going to pay down on the account. Our cash is going to be credited, $250, and Palm Supply is going to be debited, $250. Now, what you see down below here are the examples I went through in class. You can always check yourself by adding up each column, okay, and then adding up the individual columns that are debits. So all the debits added together, all the credits added together, those two numbers should equal, and you can see I did that right here. That's how I got 7275.